Hey members, I just want to give a quick housekeeping note. I've been trying to post this over the last month or so when we had a little hiccup in our system and a lot of people unsubscribed from our email alert list without really knowing it. Um, Overall, if you haven't been getting any emails or trade alerts via email, then you've probably unsubscribed from our email list. If you're not getting the morning daily pre-market email update, then you've opted out of the list probably without knowing, and you might have not been getting things for the last month or so. So I just want to recap here that make sure if you're not getting the morning video that you email us, send us a support ticket, and we'll send you, we'll reinstate the email address to get you back on the email list. Now, important to know, the SMS texts are not working right now. We're in the middle of migrating to a new platform of streaming portfolios, streaming charts with our cycles and analysis, our spike alerts, chat room, all those things. So the SMS text alerts, whenever we send a trade, usually you do get an SMS text. Right now, that's not working. So you're only going to get an email alert for new trades or to close positions. We also post them here in the members area. You can look in the members area for closing the positions, or you can take a look at our portfolio, which has our positions as well. Now keep in mind, if you're new to the service, you might want to go to the how-to guide or terminology, kind of how to enter trades. If you go to the how-to guide, there is a video kind of walking you through the website of how it works. So key here is if you're not getting morning alerts, let us know so you can get back on the list. We've closed out 5 positions in the last month, all with very decent gains. So want to make sure you get into all those UGAS, Roku, all those explained in this morning's video. All right, thank you. Good morning, traders. It is Wednesday, February 27th. We got the cycle analysis on the charts today to kind of go over where we are and what we've kind of gone through and recap on a couple of the positions so you can kind of see why and what we've done. Starting off with the charts here, we've got the 30-minute chart of the SP 500. And the 30-minute chart, the way it works is if I was to stretch this over, you'll be able to see it a little better, but more or less, we have the bars color coded. When they're red, we are in a downtrend. When they go orange, we are technically neutral, and then green means we are in an uptrend. And when we zoom into these levels, when you get lime green areas like this over here, that's an entry, a potential entry. These are kind of momentum trades, dips within a pullback, and that's what we're looking for. Now, overall, if we zoom in a little bit more, we can see the last couple trading sessions we've been above this red hashtag, indicating the market is overdone to the upside. It gapped above the hashtag, faded back down this week. Yesterday traded along this level, still more or less with a overbought territory. We've got a downward cycle, and looks like we could see the market kind of pull back a little bit more today, potentially put in a little bit of a bottom and see how it recovers over the next couple of days. So that's the short-term analysis for the SP. Now, if we look at the daily chart here, you can see we've got our blue cycle line in the background and our projected forecast, and we're expecting the market to hit this previous high, which it has. It hit it dead on. It's pulled back ever since. The last 3 sessions it's pulling back. I do expect to see some volatility. We could see a big pop and some drops here as the market tries to shake things up. It's going to probably try to break this high, get everyone bullish and long, and then get stepped on and crushed. And we're looking for more or less a downward bias or sideways consolidation in the equities market, looking forward a little while here. Now, if we take a look, let's look at the rest of the markets. Let's take a look at the tech sector, which we are short. We got an inverse ETF, and one of the reasons is we think that, let's just move this over a little bit here. More or less, we've got some potential here for a pop in the tech sector, but again, we're at that last leg here where I think we could see a big pop and a drop in the market. Today's session, or next 2 or 3 sessions, we could see some increased volatility, maybe a push to new highs, followed by a sharp reversal. If we look at the daily chart cycle, you can see how the tech sector cycles are aligning for a pullback, which is why we've just stuck our toe in the water for an inverse ETF. We're letting it kind of work itself out here. We're underwater on this right now, hoping we're going to see the selling step in here at pretty much any day. Taking a look over at our current positions right now, we are long NIO. This is a IPO, which doesn't go back far enough to give us enough data for our cycle analysis, but more or less it's an IPO. It was a weekly chart set up. We got long. It had a big pop. We've started to scale out. We took 17.7% off yesterday. We're anticipating it might pop to this 1230 area. Maybe tomorrow was it. We'll have to see where, or yesterday was maybe the kind of washout pop high. But overall, we are looking for 1230, a potential blow off top here in NIO. If we take a look at our other play that we got out of earlier in the week, we got out of Roku, ROKU. We got into the play, started to run. We got 8.8% on the first wave, started to come up, started to push higher. We got out for 18% on the second. We did have a cycle topping out here, which is why we got out. We were thinking it could very easily collapse. And we got out. A couple days later, it popped and hit our 63, 64 target, which happens. This happens quite often. You never know. You got to go with your technical analysis and your strategy. We thought it was going to start to pull back. We were happy with 18%. It took off without us, but that is fine. The key is we want to get into these, take partial profits, take the rest off when the market is saying, hey, it could take the money back from us. Let's get out before it does so. So that's where we are with Roku. We are out of that. Looking at UGAZ. This is a leveraged chart. Really not giving much. Everything is completely collapsed. More or less, everything is screaming to get out of the market yesterday on our 30-minute chart. The last couple of days, it's actually popped into an overbought territory. All these S's mean sell short. More or less, yesterday it popped higher. It almost hit our target of 36. If we were going to hit 36 in the morning, I was just going to eject out of it and close it out for a 40 or 38% gain or so, but instead it reversed back down. We closed out late in the day. We took 30% the previous day, 25% yesterday. This could continue to chop around and grind back. So overall, that was the perfect play for us for UGAZ. This was based on the weekly chart, much like our NIO play that we're up. Let me go to natural gas. You got to follow the true commodity for playing natural gas. So here is natural gas. You can see the analysis here with this type of, we had these significant bottoms at the 255, hit it several times. Each time it had a significant bounce. We had a nice bounce. We almost got to this 3 mark. We got to around the 290 area. We were looking for 293. We got out right up near the top, which is pretty good. And now we're going to let the market do its thing. Maybe if it comes back down to test this area again, we reload and try that position yet for another one. Maybe we'll get a bigger pop the next time. Could be some type of double bottom like over here before it extends higher. Looking at TechS, is the inverse ETF we got into. Let me go back to the daily chart real quick. Obviously, it's an inverse of the tech sector, the XLK, which I showed you, which is on the verge of potentially rolling over. You can see here our cycles on this one showing we should start to see increased volatility, which we have. It's hard to see because it's leveraged, but more or less we had a big drop, a gap lower, a pop higher yesterday. More or less it's trying to carve out a bottom. We are close to getting stopped out. We put a fairly tight stop. We're letting the market kind of do its thing. We may add to it or we may let it get stopped out depending on how things collapse here, how the rest of the market looks. We are trying to pick a top in the market, which is a little more tough, which is why we were stuck our toe in with a small position. We'll see what we want to do, but overall we're anticipating the tech sector to roll over, which means this ETF should have a very quick pop in price going forward. Looking over at, let's take a quick look at Bitcoin. Here's the Bitcoin chart. If we look forward here, you can see still have a downward bias for Bitcoin, but we might end up getting a really significant setup here over the next week or two. Overall, it's popped both with a bull flag, popped with a bull flag. It's kind of dropped with a little bear flag now. Maybe it's going to fade down to this area. Could be a good opportunity to get long in the near future. We're going to have these descending tops across this area here that eventually when it starts to maybe break out of here, we could take a stab at it, or potentially if we get some type of bottoming formation or reversal bar, we could take a stab somewhere down here where the market could be putting in a bottom. And or however it consolidates. It may consolidate up a little higher here, but we may try to leg into a small position anticipating some type of pop in Bitcoin when it comes. Looking over at the US dollar index, been talking about this for a while. The dollar is still in a very strong bull market. It's got higher standout lows. It's got higher and higher standout highs. If we zoom in on the chart here, you can see where we are in the grand scheme of things. The trend, short-term trend is broken down, but the long-term trend is up. We've got a rally, rally, pullback. Looks like we're going to have another rally. This is the UUP. It doesn't follow the dollar index perfectly, but another rally from here on the US dollar index could put us to 99, 100 on the index scale, which is a significant mental whole number, 100 for traders, investors to want to move out of the dollar to sell. It's also a major resistance going back on the charts. If we do get this dollar to move up here, this drop and flush out is very similar to this drop and flush out we've seen in the past. This is just how the market likes to correct. You get a little ABC correction, an ABC correction. It's the break of these mid lows here that flush the market before it takes off. That's what we saw yesterday. Rally here will send gold, silver miners lower, which is what we've been anticipating. Taking a look at gold here, it's increased its volatility. We talked about it back over here that things are going to, or maybe it was over here, things are going to start to get choppy. We're going to start to see pops and drops in the market. I do feel as though things are getting a little coiled, a little potential here for the market to really chop around. In the grand scheme of things for the gold here, and same with silver, same with miners, is we're getting into this type of price action. We got to expect we're going to start to see some big range here and movement as it tries to kind of top out as the dollar potentially rallies. So expect some big volatility. We did get long back here in September. I think it was right over here somewhere. We got out right over here. And this was the GDXJ. We're now going to let the market do its thing. We could potentially get long on a breakout. We could potentially, depending on how this spikes and pops up, we may end up getting a short position for some type of quick pullback to the lower end of the range, somewhere in here. But expect a lot of noise going forward for precious metals. Looking over at, let's take a look at crude oil real quick. Crude oil moving up here. If you can see this potential here, it is trying to build its base. It is trending higher, breaking some highs. Cycles does show that we should be starting to move higher again. Overall, I'm not a huge fan of getting into crude at this point, but when you look at the cycle, it paints a pretty good picture of where the bias is. Maybe this is going to start to run and move up for another week or two, potentially get up to this next resistance target, this blue line on the chart. Overall, it does have a bullish bias, but I don't really see a clear setup. I mean, we could potentially chase a breakout, see if we catch this. Commodities should start to firm up if the equities markets roll over. They have been firming up and doing well, but maybe they're going to have a little bit of a run. I think the dollar is going to have a lot of play here, though, so that's one of the reasons why I'm a little neutral to bearish on commodities in general at this point. Last but not least, take a look. This is the daily chart of bonds. Obviously, bonds, they haven't been rocketing higher, but they've been holding their ground for the last couple months. As the stock market's been rallying, we've seen bonds continue to hold their ground, and actually there's some fear in the market that equities are going to roll over. And as that happens, if the equities market rolls over, we're going to see bonds start to take off and become the safe haven again. And what's interesting here is bonds really haven't gone anywhere. They've had more or less they've been channeling or building a little rising wedge here. But overall, look at the volume on bonds. It's almost like smart money knows where they're going. They're rotating out of stocks. They're getting into the safe haven bond plays, getting ready for potentially a pop in bond prices as we get a correction in the equities market. So we're going to keep our eyes peeled for that going forward and see how things unfold there. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.